Well, hey there, aspiring women homebuyers. Buying a home is exciting, but let's be real, it can also feel overwhelming, especially when it comes to the financial side of things. You've probably heard people say, you need to save for a down payment. But what they don't tell you is that's just one of the costs involved. There are loan fees, closing costs, taxes, insurance. And if you're not prepared, these expenses can sneak up on you and put your homeownership plans on hold. But here's the good news. You do not have to figure this out alone. In this video, I'm breaking down exactly what you need to save for, how to reduce those costs, and strategies to make homeownership even more affordable. By the end, you will have a clear financial game plan so you can move forward confidently toward owning your dream home. Sound good? Let's get started. So let's start with the bad news, because I have some bad news. And you're not going to want to hear this. In fact, you might feel frustrated, maybe even a little discouraged. As I hinted in the intro, when it comes to buying a home, there's more than just the down payment. So our first step is to understand all the costs involved. You need to know exactly what you're paying for, so there are no surprises when you get to closing. And most people know about needing a down payment. But let's clear up a common misconception. You do not need 20% of the purchase price down in cash. Yes, a bigger down payment can lower your monthly mortgage, but there are loan options that allow you to buy with as little as 3% down. Some even are 0% down if you qualify for specific programs. So before you stress, know that you have options. Then there are the loan closing costs. Your lender will charge fees to process your mortgage, but there are also required prepaids, things like property taxes, which you typically prepay a few months' worth at closing. There's homeowners insurance, which lenders require at least the first year paid upfront. Then there's prepaid mortgage interest. The fees vary based on your loan type and location. So always ask your lender for an estimate upfront so you can budget accordingly. It's why we encourage you to connect with one of our Home Buying for Women lender partners early on, so you know how to set up your plan accurately to avoid surprises later. Then there are the title company costs. Now, the title company handles the legal side of the transaction. They don't give legal advice, but they just make sure all the paperwork's done properly. And their fees include an escrow fee since they act as a neutral third party holding all the funds and processing the documents. And there are recording fees, which are pass-through costs from the county. Sometimes you may also have to pay for a survey and title insurance too. You might also have HOA expenses. If you're buying a home in a community with a homeowners association, there could be upfront fees due at closing. Some HOAs may require a one-time fee at closing for a capital contribution, and transfer fees in addition to prepaid dues. I know it's a lot, but trust me, knowing this puts you ahead of the game. And the good news? There are ways to reduce these costs. And you've got to stick with me till the end to hear about that, because there are other tips to help you financially prepare for homeownership that we need to cover first. Step 2, develop and stick to a budget. Now that you know what costs to expect, let's talk about how to actually afford them. The best way to do that? Creating and sticking to a budget that maximizes debt repayment and building your savings while eliminating excess spending. I know, budgeting is not the most exciting thing in the world, but trust me, having a solid financial plan is what separates the people who want to buy a home from the ones who actually do. So here's the plan. 1, create a budget that supports your homeownership goals. First, take a hard look at your income and expenses. What are you bringing in every month and where is it all going? Your goal is to free up your money to pay off your debt and save for all those expenses to buy a home. Whether that means cutting back on takeout, canceling unused subscriptions, or finding creative ways to boost your income. And number 2, start living like a homeowner now. If you want to know whether or not you can afford to own a home, try living on that homeowner's budget today. Let's say your estimated mortgage, property taxes, insurance, and maintenance costs would total around $2,500 a month. But right now, your rent is only $2,000 a month. Instead of waiting until you actually buy a home to adjust, start setting aside that extra $500 each month into a separate savings account, or use that to pay off your debt. An added benefit to this is it proves you can afford your future homeownership lifestyle. Number 3, pay down debt while you save. Debt can make it harder to qualify for a mortgage and leave you feeling stretched thin. I'm not saying you have to be debt-free before buying a home, but if you're carrying high-interest credit card debt, personal loans, or car payments, start tackling those now. A lower debt load means you'll typically have a higher credit score, which means you'll get a better mortgage rate. A lower debt-to-income ratio makes it easier to qualify for a loan. More financial breathing room once you own a home. Look, I get it. Sticking to a budget is not always fun. but this is a temporary sacrifice for a long-term reward. And the best part? When you finally get those keys and walk into your home, you won't feel so stressed about money. You will feel completely in control. Step 3. Understand what it takes to have good credit. So let's talk about something that can literally save you thousands of dollars over the life of your mortgage: your credit score. Your credit score directly impacts your ability to get approved for a loan and determines the interest rate you'll pay. And that interest rate, well, it's the difference between keeping more money in your pocket or paying thousands extra to the bank. For example, let's say you're getting a $250,000 30-year mortgage. With a 760 plus credit score, you could pay around $101,970 in interest over time. But with a 620 credit score, that jumps to over $180,000 in interest, nearly $80,000 extra just because of your credit score. So if homeownership is in your future, here's what you need to do right now to make sure your credit is in the best shape possible. 1. Monitor your credit early and often. Many home buyers wait until right before applying for a mortgage to check their credit. Kind of a mistake. The best time to check? About a year before you plan to buy. This gives you time to fix errors, track progress, and understand where you stand. Credit report mistakes happen, and they can drag down your credit score. Dispute anything inaccurate. You can sign up for free credit monitoring through services like Experian. Your credit score will determine what loan options and interest rates you qualify for. Number 2, take action to improve your credit score. A strong credit score isn't built overnight, but small improvements can make a huge difference over time. So here are some of the things that move the needle the most. Paying your bills on time. Your payment history makes up 35% of your credit score. Even one late payment can drop your score significantly, so set up auto pay if needed. And lower your credit utilization. Using too much of your available credit can hurt your score. Experts recommend keeping that under 30%, but even a utilization under 10% is better. Avoid opening new credit accounts. Every time you apply for new credit, like a credit card or car loan, it triggers a hard inquiry, which can temporarily lower your credit score and pay down existing debts. Not only does all this help your credit score, but it also lowers your debt-to-income ratio, which is another factor lenders consider when approving you for a mortgage. The bottom line, good credit saves you money. The better your credit, the lower your interest rate. And that means smaller monthly payments and thousands saved over the life of your loan. So if you are dreaming of homeownership, don't wait. Start monitoring and improving your credit today. And now that you've got your budget in place and your credit is on track, let's talk about step 4, how to boost your savings faster. A lot of people assume saving for a home takes years of extreme sacrifice. And you know what? If it does, that's okay, because that's actually my story. But if you want to fast track it, I'm going to show you how to supercharge your savings with some strategies that you may not have thought about before. We'll cover the obvious ones, but we're going to go deeper because the fastest way to homeownership is by using strategies that a lot of people overlook. So let's get into it. The first one is cut expenses in unique ways. Negotiate your bills. Call your internet, phone, and insurance providers to ask for discounts. A 10-minute call could save you hundreds per year. Use cashback apps and browser extensions. Rakuten, Honey, and Upside give you free money on purchases you're already making. And buy grocery smarter. Use apps like Flash Food or Too Good To Go, which offer big discounts on fresh food stores need to sell quickly. Ditch unnecessary subscriptions. Look at past credit card statements to see what subscriptions are out there you may have forgotten about. One of our lender partners has the ability to get you pledges to your down payment when you shop online at over 1,000 participating retailers. Automate and separate your savings. Set up an automatic transfer to a high-yield savings account. Every paycheck, have a set amount automatically deposited before you can even touch it. Your basic bank savings account is not a high-yield savings account. We don't endorse a specific bank, but a quick Google search turned up many online bank savings accounts, giving anywhere from 3% to 4% interest. And before signing up for one of those, be very, very sure that institution is an actual bank. Make sure they are FDIC insured before moving your money there. Create a home fund bank account. Keep it completely separate from your regular savings so you're not tempted to dip into it. Online Bank Ally allows you to create buckets for your general savings account. So you could have a home fund bucket set up inside your overall savings account. And at the recording of this video, they're actually offering a 3.8% interest rate. Make more money without a second job. Working extra hours or picking up a side hustle is great, but there are also some other passive ways to make a little extra cash. If you're good with it, You can sell data you might already be giving away for free. Apps like Nielsen and Mobile Expression pay you just to install them on your phone, but they are going to track everything you do. User testing and Respondent pay you for giving feedback on websites. You can monetize your skills without extra effort. If you're good at graphic design, writing, or coding, you can sell templates or digital downloads on Etsy. If you're bilingual, you can offer translation services or tutoring on Preply. And take advantage of hidden savings and assistance programs. There are so many money-saving opportunities that people don't even know exist, like employer homebuyer assistance. Some companies offer grants or matching programs for homebuyers. Check with your HR department. There's first-time homebuyer savings accounts. Some states offer tax-advantaged savings accounts for first-time buyers, and a lender can help you know what's available in your area. And you can turn your rent into savings. Get a roommate, even if temporarily. If you can split rent for just 6 months, you could put away thousands more in your bank account. At the end of the day, saving for a home isn't about cutting out every little thing you love. It's about making smarter choices with your money. If you start applying just a few of these strategies today, you will be amazed at how much faster you can reach your goal. And now that we've covered how to boost your savings faster, let's move on to step 5, how to choose the right mortgage and loan program for you. Okay, so to recap, you've been putting in the work budgeting, improving your credit, and building your savings. Now comes the step that actually gets you into a home, choosing the right mortgage. And this is a huge decision because your loan determines how much home you can afford, how much you'll pay in interest, and what your monthly payments will look like. So I'll walk you through just some of the different loan options and what to consider when choosing a mortgage. So first, understand your loan options. Not all loans are created equal, and choosing the right one depends on your financial situation and goals. And the most common types of home loans are conventional loans. And those are best for buyers with good credit and a solid down payment. And these loans don't require mortgage insurance if you put down 20%, but you can go as low as 3%. The FHA loan, a great option if you have a lower credit score or a smaller down payment, and they can go as low as 3.5%. A VA loan, if you're a veteran or active duty military, this loan lets you buy a home with zero down payment and no mortgage insurance. A USDA loan. Now, this is designed for rural and suburban home buyers and doesn't require anything down if you meet income requirements. But those aren't your only choices. There are first-time homebuyer programs, down payment assistance options, and down payment crowdsourcing, but not every lender offers them. And that is why working with the right lender is just as important as choosing the right loan. Step 2, find a lender that works for you. Here's the thing, not every lender is created equal. Some lenders only offer 1 or 2 loan types, while others have access to specialty programs that can make homeownership way more affordable. And if you've been listening throughout this episode, you've probably noticed that we've mentioned a few unique lending options that most banks won't tell you about because they can't offer them. And that's why we have Home Buying for Women lender partners who specialize in helping buyers just like you get access to the best loan options for your situation. So instead of spending hours researching lenders and trying to figure out who actually has what you need, we can connect you directly with a lender who will. And they'll review your unique situation, find the best loan programs for you, and walk you through the process with full transparency. So if that sounds like something you'd want, I've got a link in the description where you can connect with one of our trusted Home Buying for Women lender partners today, or go to homebuyingforwomen.com/lending-advisors. Step 5, get pre-approved and know your budget. Before you start house hunting, the most important step is to get pre-approved. A pre-approval letter tells you exactly how much home you can afford. It strengthens your offer when competing against other buyers, and it prevents surprises so you don't fall in love with a house outside of your price range. And remember, just because a lender approves you for a certain amount, it doesn't mean that's what you should borrow. You don't have to go to the max. Make sure your monthly payment fits comfortably with your budget so you can afford your home without feeling stretched. Okay, so we've covered all the major steps to financially prepare for homeownership. But before we wrap up, I have a bonus section that could save you thousands of dollars when you buy a home. Now, most people think they have to come up with all the money for their down payment, closing costs, and fees all on their own. But what if I told you there are ways to have someone else cover those expenses for you, or at least a portion of them? That's where loan programs and seller concessions come into play. If you know how to use them to your advantage, you could significantly reduce the amount of cash you need up front. And in some cases, even buy a home with little to no money out of pocket. Thousands of home buyers each year get help with their down payment and closing costs. And no, it is not just for low-income buyers. And that's one of the big surprises people have, a surprise in a good way, after they talk with a lender. I've already mentioned a few unique programs like crowdsourcing for your down payment, which, by the way, is not done by like a simple GoFundMe account. It's a special account offered by one of our Home Buying for Women lender partners. So you'll have to connect with them to make sure you're getting set up properly with loan underwriting rules, or even shopping through participating retailers to get credit to your down payment. There are tons of state, local, and national programs that can provide grants, low interest loans, and forgivable loans. Now, grants are free money that you don't have to pay back. Low interest loans are special loans to cover down payment costs with lower interest or even deferred payments. Forgivable loans are loans that are completely forgiven if you live in your home for a certain period of time. And you can also negotiate seller concessions. Most buyers think only about the price of the home when negotiating. But one of the most powerful ways to save is by getting the seller to cover some of your closing costs. Now, what are seller concessions? Well, this is when the seller agrees to pay part of your closing costs, prepaid expenses, or even buy down your interest rate. And the amount a seller can pay depends on the type of loan that you're getting. Typically, conventional loans allow up to 3 to 6% of the home price in seller concessions. FHA loans allow up to 6% of the sales price, and VA loans allow up to 4% of the sales price. Oh, and USDA loans, those allow up to 6% of the sales price. Now, how do you ask for a seller concession? Well, if the home has been sitting on the market for a while, the seller may be motivated to offer concessions to help it move faster. Instead of negotiating a lower sales price, you could ask for closing cost assistance instead, and that keeps your upfront cash lower. With an experienced agent, like one of our Home Buying for Women realtor advisors, they can structure your offer strategically so the seller is more likely to agree. And remember, you do not have to figure this out alone. If all of this sounds a little overwhelming, don't worry. That's why Home Buying for Women exists. Buying a home is a huge financial decision, and you deserve to have expert guidance to help you get the best deal possible. So if you are serious about homeownership and want to see what loan programs, seller concessions, and lender incentives you qualify for, let's connect. Click the link in the description, and we will match you with one of our Home Buying for Women lender partners who can help you find ways to save. You've done the work to financially get prepared. Now let's make homeownership happen. At Home Buying for Women, we're here to support you. We have resources, tools, and even growth groups to keep you motivated. Now, if this video gave you hope or inspired you to take action, please let me know in the comments and hit that thumbs up. Share your goals, big or small, and let's cheer each other on. So remember to like, subscribe, and share this video with anyone who might need a little encouragement. Together, we can make the dream of homeownership a reality. You can do this. We'll be your guide.